Hello, happy Tuesday. Gina here with your Tuesday, February 4th weekly market update. Okay, lots to report on. It was quite an eventful week. The tech sector obviously experienced volatility, particularly surrounding NVIDIA. And this, as we mentioned last week, was due to concerns over the new AI model from the Chinese startup DeepSeek and the potential impact that that could have on NVIDIA's demand. It does appear that as of today, NVIDIA was gaining and looks like it's set to actually gain from the wider tariff relief. So we will have to keep watching that. But again, NVIDIA is a stock that, just like most other stocks, that when we buy for the long term. And currently, we do not have concern over the long-term strength and position of this holding. NVIDIA's fundamentals are solid. Their GPUs, general processing units, are crucial for AI development, which is obviously still at the infancy phase of its development and integration into our lives, and also the data centers. So they continue to have a significant competitive edge in the space. But their continued strength will depend on their ability to innovate and maintain that position. I suppose one could argue that DeepSeek bringing more competition could be good and could motivate more innovation for a company like NVIDIA. So we will keep our eyes on it. Let's see, what else? The Federal Reserve decided to hold rates steady last week. This initially caused a dip, but was followed by a rally earlier in the week. There may have been a few factors contributing to that, but bottom line, the Fed's stance and the Fed's Chief Powell's remarks at his press conference can be summed up with one simple remark. The Fed is in no hurry to cut rates right now. I think he mentioned that 5 times. So progress towards 2% inflation has stalled. Solid economic growth gives the Fed some leeway as it holds off on further rate cuts. But if progress on inflation does start to resume, then the Fed's prepared to reduce rates again. So we'll see. Earnings came out on some of the major tech companies: Apple, Microsoft, Meta, Tesla. Apple and Microsoft saw positive reactions. Tesla was mixed. All are up so far today. But of course, the most dynamic situation taking place right now is the tariffs. So the market is seeing more fluctuations due to tariff development and negotiations. Trump postponed, as of today, Tuesday the 4th, Trump has postponed the tariffs for 30 days with Mexico and Canada, but they did go into effect with China on their goods, which they have since retaliated on with natural gas, coal, and some other products. Overall, the tariffs have certainly introduced a lot of uncertainty into the market, which has led to increased volatility and concerns about the broader economic impact. So far, they're just concerns. I want to reiterate to everyone that we are not in the business of predicting what will actually happen or subsequently transpire. Our job is to take the emotion out of the decision making and decipher what the market is actually telling us that it wants to do, and then we react accordingly. Certainly, we anticipate making shifts, and there will be sector-specific impact with tariffs. But we will continue to monitor the developments and keep you posted on any and all major decisions. If you have any specific questions related to your portfolio, as always, feel free to reach out. Thanks.